This is Data Trader Pro with a nightly market wrap update for March the 15th. This is the evening before a big Fed announcement on rates. So we'll see if they leave things unchanged or if there's another hike coming. Probably unlikely that another hike coming, but as you all know, the language is very important. The market and the bots hanging on every word. So 2 p.m. tomorrow, definitely a market catalyst. So just keep that in mind, and basically we'll get on to our update. Okay, so we had a kind of a rare day today, and by rare day, what I mean is, we had a bearish trend day signal at 10:15 Eastern Standard Time. Our day type indicator fires every day at that time, based on the market internals from open until that time. So the first 45 minutes of trade, it makes a determination on what that day. Back testing is about 75% accurate, so a little more than 75% in fact. But we had a day today where price dropped. And it looked like the bearish trend day was going to play out, but there was a mid-afternoon rally that was very, very slow, and actually price came back. No, it didn't gap fill because SPY started with a gap down, but it came fairly close to filling the gap. So what's unusual about that is not just that it basically invalidated the bearish trend day signal, but internals were universally bearish, meaning stocks were sold and price stayed the same, or even late in the day gained a little bit. So to show you how unusual that is, I'll show you some internals. The dollar weighted buying pressure was basically down all day, a couple blips, but it trended down like a trend day. What you get on a trend day, a bearish trend day, also is a solid the DTP MCC is our version of the intraday McClellan. It was down like a bearish trend day all day. Net issues down on the floor all day today. Net volume, this is a typical trend day. Net volume starts out at 0, right off open, and just trends down in the same direction. Couple tiny little blips, but nothing to write home about. So basically the internals were, and pretty much all day played out as a bearish trend day, but price didn't agree. Let's look at the market map. All advanced decline ratios negative. Started the day worse, ended up still in negative territory. NYSE, Nasdaq was slightly worse. Nasdaq combined, this is all Nasdaq indices. SP500 gained a little bit, was quite bearish, but came off the lows, but still ended bearish. Nasdaq 100, same. Russell was the worst performing index of the day. It was like 1.5% down, or even more at its lows. The Dow slightly positive, right? So a little divergent, but yeah, we'll have to see. With only 30 stocks, it's very easy for one to outperform and lead this up. So one or two stocks. So yeah, so basically, almost universally bearish, not massively bearish, but certainly there's not a lot positive here to write home about. So let's move on to let's look at this divergence. All right, SP500 via the SPY, very slightly down. These will include aftermarket, after hours readings. So Nasdaq 100 very slightly up, Dow slightly up. Look at the Russell and the composite, and our divergence meter is getting into the highs. Anything between 1 and 2% speaks of an unhealthy market. Unhealthy markets can continue, but generally we see these as reversal points. Sectors, biotech slammed. One particular bio stock was cut in half today. I think it was VRX. It's a component of the Russell 2000. That's some of the reason the Russell was down, but the Russell's got 2,000 stocks, so a lot of biotechs, and Russell does have quite a few biotechs. The biotech sector was down today, pummeled in fact. Healthcare down, telecoms down. Very little was up. Natural gas, canary in the coal mine. Natural gas is usually up when the market's down. Don't ask me why. It's not a real correlation, but it's something we notice. Nat gas tends to go opposite of the market. So when things are, you're looking to buy something on a very bearish day, look at natural gas. It may well be up. All right, let's go on to breadth. As you see, NYSE was as low as -5 to 1 on the advanced declines. Nasdaq over 6 to 1 negative. Russell 2000 almost 8 to 1 negative at its lows, at its most extreme today. We finished somewhere in the middle of the range on the Russell. We finished close to the highs, which is still bearish on the Nasdaq, and close to the highs on NYSE, as mentioned. Net volume via the volume delineator. These are moving fairly fast moving average of the net volume on each. So these are just so that it doesn't bounce back and forth too quickly. These are all negative. Yeah. Trends ended up in the neutral ranges on all three roughly. So a bearish picture consistent with what we were looking at on the trend page. Volatility was flat. It started out moving up a little bit, and all of the VIX related indexes, the VXST, which is the 9-day, VIX, which is the 30-day, VXV, which is the 3-month version of the VIX, they were all green. Certainly VXST and VIX more than VXV. Volatility, the VVIX index was ended the day slightly green, but I would say volatility flat, but not down. We're going into VIX roll. We've rolled this gauge already, so this represents the new the relationship between the new front month, which starts tomorrow, which will be the April VIX, to the May. So we're still in, we're going from basically 8 to 9% contango to a little under 4% now. So that improves the picture for things like VXX, but it's still a negative, and it's still a headwind for VXX. So until VIX futures really rally, this is going to stay this way for a little bit. What are we going to move on to? Block trades. All right, here's the picture, a picture that gets kind of interesting because we've had some size. Now, we had quite a few supporting trades down at the recent lows, a fairly large print here, lots of supporting prints. We retested the low area, it actually dipped slightly below it and then popped back up, and you got a lot of late buy prints shown. Now what's happening here is we look like we've been selling up at the top. Now obviously the way we treat these is very simple. Price if price stays below all these prints, then we're bearish. If it rises above, we're bullish. It's very simple. We don't have to second guess ourselves a lot. But this is what we tend to see at points of market turns, is you start to see very large prints, and then you start to see a lot of late prints. So we got what looked like some sells up here on the highs, some more here, a bunch of late prints, which is why they're off the price line, because they were reported much later from the dark pool. And then at the end of the day, a lot more, and then at the end of the day, a very large right at close, 5.3 million print. Price is really basically about the same as what the print level is. It might be slightly above by the end of after hours, but not massively, just a few cents above. The Qs, same thing, quite a large print for QQQ after a lot of sorry, it auto scrolled back, a lot of supporting buys here. Price jumped up. And basically, this could be another distribution area. So we're going to watch this 106.64, 65 area. we're slightly above that now, just 10 cents above that, so not a big deal. IWM, you see what happened. The IWM looks like what we think these guys, the SPY and QQQ, will look like in another day or so. But you know, we don't want to get too far ahead of ourselves. We want price to confirm. So basically, you know, you can see the patterns here. We get big prints, late prints, price goes down, they buy the lows, price shoots up, they sell and distribute the highs, price goes down. You get big prints, lots of little prints, bunch of late prints. That acts as the ceiling, so to speak. And you know, basically we're bearish, although you know we got some trades here at the bottom, 1 million and a bunch of probably 500,000, 300,000 size shares at the bottom. So you know, maybe that's a buy where things go back up to retest this level, but we'll see. You know, certainly above the 107.96, let's say 108 area. You know, this is almost 108. We're up here, we're in the low 108s. So basically above the low 108s we're bullish, and below that we're bearish. Yeah, so that's the picture. Is what, you know, basically we're seeing bearish internals, some potentially distributive block trades agreeing with that. Daily internals, you know, these are your advanced declines. You know, in numbers, not in ratio. NYSE bearish, you know, Nasdaq bearish. Let's go to the composite indexes. You see RSI on the NYSE composites turning down, starting to curl down. RSI on the Nasdaq composite starting to curl down. New high, new lows on the NYSE peaked a week ago, and you know, is dropping quickly. Yeah, so we had a peak yesterday on the Nasdaq, and it's dropped severely on the Nasdaq new highs versus new lows. So yeah, you know, there's an overall bearish tone to this, and you know, I don't think we can ignore it going into a critical Fed meeting, and seeing that they're magically keeping price afloat, you know, on just a few issues. I think that kind of divergence is very important sometimes. Let's look at where we are at. This is just SPY versus VXX. So we're starting to get some positive RSI divergence. VXX RSI is moving up while price has been moving down. You know, RSI on SPY is moving down when price is moving up, so that's also agreeing with this slightly bearish picture, well, reasonably bearish picture that we've got going. Where are we at? You know, in SPY we've come way off the lows. Obviously, everybody knows. We're still there's an open gap here. I think that's about, what level is that? That's about 203.84 roughly. We may target that before we drop. We may just drop. We'll have to see. Usually on Fed days there's a lot of volatility, as most traders know, and you get a lot of movement both ways. So I wouldn't rule out another pop, but you know, I'd probably start to, unless all the internals turn around, and you get a ton of supporting buy block trades on whatever low you get, then I would just say that, you know, probably the safer trade now, given how far we've traveled, how quickly, the safer play now is to start hunting shorts. So I would short pops, you know, in the next day or two, versus trying to buy, you know, very small down moves, hoping to get another % or so. I think more money will be made to the downside in the next few weeks than to the upside. I could well be wrong, but the internals are painting that picture right at the moment. So I think that's it. That covers quite a bit. We'll see tomorrow what happens with Fed. I may do another wrap tomorrow if anything significant happens, if we get a major reversal in the market. But till then, stay tuned. Thanks for joining us, and we'll see you soon.